Well, it's often said that marriages are made in heaven, but this one perhaps was forged on floor of a dealing room. Shankar Sharma and Devina Mehra. Shankar, let's take the clock back and talk about how it started. Love at first sight, or it was business was brought you together?
Actually, it was business that brought us together. It was not love at first sight, but in an environment like Citibank, which was very dog eat dog, I found her to be very uncomplicated, very humble, and especially in context of her having been an IIM Ahmedabad topper, for that person to be humble was a rarity in Citibank. So that was an attractive quality.
Devina, your partners in real life, your business partners, but who's the ultimate boss?
I don't think in such a relationship you can have an ultimate boss, because then it won't last that long. I mean, especially earlier when we had started working together, a number of clients used to be quite taken aback when they came to know, and they would say that I had never worked with my spouse because we'd be divorced in no time at all. But we really enjoy being with each other, and that can't last over, I was just calculating, we've been working together almost 23 years.
So, Shankar, are you a henpecked husband like me?
I always say I am very, very henpecked, but she disagrees, and but then
pecked is more like it.
But then that's it. So we have differences of opinion. So clearly, the henpecked part is a huge difference of opinion. She disagrees, and I disagree too. So that's it. But yeah, but we disagree on things, especially in the investing business. You can disagree on almost everything, as we all know. But that's the fun part of it. That eventually, because of disagreement, your arguments become more rational, more analytical, and so it keeps escalating the level of thinking, and that's what has happened over the last 25 years or so.
Shankar has been making a case of late that large cap stocks are getting tired, they are not going anywhere. It's time to revisit the tiny toons, the mid and the small cap stocks. What's the thinking behind this call?
That has been our thinking for almost a year and a half, because it's also to do with the large cap space is very much driven by either overall national or international factors, whether it's commodity prices, or whether you look at, if you look at demand drivers, it tends to be some derivative of the GDP or some portion of the GDP. Whereas, and those things we had not seen any big upside. We had not seen that, that suddenly there would be a big revival, which we've seen in the last 2 years. We've just sort of chugged along. We've not really had a big revival which could drive large cap names. But for small caps, the drivers can be quite different. I mean, it can be debt restructuring, it could be pricing of something which is not nothing to do with overall demand drivers in the economy. It can be that you are exposed not to the nation's growth as such, but maybe to a state, maybe to a city, somewhere where you can get an order. So that has been very different, and at that stage they had been very beaten down also. So to that extent, as long as you chose carefully, that was a space that could give you the returns which were unlikely to come from the large caps.
Shankar, when we rolled from 2015 to 2016, there was a sense of optimism in air, but you went on record, you came on Etina and you said that let's not lose sight of what's going on in China, let's not lose sight of global cues, and then we saw a big crash across the board in all financial markets, and everybody started drawing parallels between 2008 and 2016. Do you think worst of the print is behind us?
Now here's at least what my take is, and my take is I don't think globally markets are done with being bearish. I think they are still we are still in a broad bear market within which we will keep having kind of rallies. But what I do believe has changed, or at least is in the process of changing, is that the big bear market in commodities, to my mind, is near an end, if not already ended. So we turned bullish on oil, around the $27, $28 mark where it was a couple of months back, and simultaneously on other industrial commodities. We've seen a good rally. I mean, oil has been up about 40-45% since then. I don't think that's completely done. So my belief is that one part of the big global macro trade has changed, and which is extreme pessimism on emerging markets, extreme pessimism on commodities, extreme bullishness on the dollar. All these three trades are up to be questioned, and there is too much consensus on all three. And we like to be seen in places where there's too much consensus, because consensus is always going to be wrong. You just have to choose the moment carefully. I think we are at that point. I would want to bet on commodities being really the space to be in for this year, rather than non-commodity or non-cyclical businesses.
So does that mean that as a house, as a firm, you are bullish on Brazil, you're bullish on Russia, largely commodity producers, not commodity importers?
Yeah, I mean, and if you've seen in the last few weeks, they've already been moving, and even going forward, we think in general emerging markets will outperform, and within that, it is the commodity-driven emerging markets like Russia, Mexico, Brazil that are likely to further outperform within the pack.
Shankar.
And then the other thing is that Tata Steel is being sold. So I mean, if you want the final confirmation of what is the bottom of a commodity cycle and what was the top, I think there you are again.
In terms of positioning, how are you positioned in equities? Because you've been very vocal about the fact that India was a crowded trade. India is still a crowded trade. India is still trading at a premium to other emerging markets and other developed markets. So do you think the India position needs to be hunkered down now at global level?
I mean, our take is India has been over-owned on large caps, in light of the fact that people expected economic growth to genuinely revive, as opposed to optically reviving by way of the fudging of the GDP data. That's not happened. Whilst on the other hand, because of that factor, India became over-owned and thereby more expensive. Commodity markets on the other side, commodity-driven markets on the other side, have been crushed in the last 12 months or so. So I think the needle has swung in favor of those markets and away from commodity consumers, particularly commodity consumer like India, particularly within that the large caps. So the case we are making is large caps are not going to go anywhere in India, at least broadly speaking. The real space to be in India is small, mid transforming into largish companies, and there's enough opportunity out there. But if you want to look at a global macro trade, I mean, India is definitely not, in at least our view, a hot trade right now.
So what is a hot trade then?
Commodities are a hot trade.
Commodities.
Yeah, and therefore commodity-driven markets as well.
Is that, so when you say commodities are a hot trade, are you talking about crude, or are you bullish on commodity as a complex?
Crude as well as industrial commodities, so some of the metals as well.
So you will not shy away from buying metal stocks as well?
Yeah, I mean, provided, remember again, in metal stocks, you have to look at balance sheets. That's the additional overlay on top of the core metal itself. But it does help if the core metal is doing well. And we look at steel in India, balance sheets are stretched, we all know, but the anti-dumping duty which has come in on top of a revival in iron ore prices and therefore steel prices has put some kind of a floor on their financials and their fundamentals. So, and the stocks have done reasonably well in the last few weeks' time. So, those are the kind of place. So, yes, if you have the tailwind of good commodity prices, all those stocks are beaten down, all their bonds are beaten down, and they are good places.
For the longest time, Shankar, you've argued that avoid banks. The trust factor is missing. What is important for buying banks is that you need to have the trust factor, and that's not there with PSU banks, which is visible, and that's also not been missing with some private banks.
Well, private banks, in my view, most of them, or at least some of them, are quite good at managing or window dressing or evergreening. I mean, we as a house like distressed companies or company with a lot of debt. So that's where you can make big delta if you can get the restructuring of the debt right. And so obviously the companies, their bankers, what kind of stuff keeps happening, and that's not pretty. And these are coming from private sector banks, not the old line PSU banks. So it's not as if those banks can walk on water. Banking is a very tough space. They are good spaces to be in on the up cycle. And the down cycle, when, by the way, loan growth, asset growth slows down, normally in an up cycle, the NPS get hidden as a percentage because your asset growth is so fast that every year the percentage of NPAs, keeps declining. But when that balance sheet growth slows down, as it has, these numbers start to go up apart from core delinquencies. So, we don't like banks, as a general business. Some of them have been exceptions. HDFC Bank, we've liked from the time it listed in what, 96
Yeah,
or
we
something?
had brought out
Actually,
a report right
yeah.
then. We had brought out a report which had a baby and Arnold Schwarzenegger on the cover saying this is where it is now and this is where it will be.
Yeah, you should ask Aditya Puri
Yeah.
or Shailendra Bhandari about it. They will
Everybody in HDFC Bank still remembers
remember
that
that report.
report.
So you should ask Aditya Puri and Shailendra Bhandari about that report, and they will tell you.
But I mean, in banking, we don't see a big revival simply because also we don't see credit growth reviving big time. That again comes from talking to companies, and you find that now companies are so scared of taking on debt ever again. We may talk about taking on risk and investing, etc. But most promoters are in that mode that once I get out of this debt trap, I'm never going to take any debt or any significant debt ever again. And I think that will cause the balance sheet recession, which can really take a generation to go through the system. So
I mean, we know a promoter whose son has seen his father, get hounded by calls from bankers or even bankers visiting the home for the last 6 years. The son is 14 now. He started seeing that when he was 8. Imagine what impression it creates on a child's mind to see the parent being under so much stress day in, day out. Do you think that father is ever going to, take a bunch of loans to set up a plant? No way.
And also, now the whole mindset has become that anybody who's defaulted on a debt has, stolen the money in a sense, which may not be true at all. It may be just, it might be bad business decisions. It might be, just a change in commodity prices, which has caused
the crisis
distress.
itself.
Yeah.
Pricing power is gone, commodity prices have come down.
I mean, this
cycles
is a
have
very
changed.
negative thing that has happened post Vijay Mallya episode. That and people, and thanks to Twitter, etc. I mean, everybody has an opinion, and suddenly anybody who is defaulted or has owed money to banks is a thief or something. I think that's a very, very wrong thing.
Devina, how should one invest in this new world? Interest rates are low. Central banks will follow a loose monetary policy. They are committed to do that. Earnings are not going anywhere. Deflation risk is real, and growth is going to be precious.
Yeah, I mean, in fact, again, being away from consensus some time back when the consensus was that the US would raise interest rates and go on, raising interest rates, we were always of the opinion that that's not going to happen because, again, you have to go back to the psychology of the nation, and because of that institutional memory of Great Depression, that is one mistake they don't want to make. They might make other mistakes, but they don't want to raise rates and hence, again, tell other countries that they must take the pain, but they would not do it themselves. So, I mean, now it is a tough environment for investing, no doubt, because, in India still on the fixed income side, the returns are still not too bad. So I would still think that, a significant part of your portfolio should be on the fixed income, and whatever you can lock in at this stage, it would make sense. And otherwise, then again, it's still the small and medium, if you're looking at the Indian market as such, still would be biased towards the small and medium caps.
I mean, the interesting data we were looking at is that since 2008, how many companies have churned out of the Nifty? 40% of the Nifty is something like that.
Commodities is out completely. Autos have a very large
Let's not look at
dominance.
the companies. I'm just telling the level of churn that exists in any index. And go back to FTSE, go back to NASDAQ, go back to S&P, you will see 40-50% churns happening every 3, 4, 5 years. So what does it tell you? That a static mindset in investing, that this is a great company, I'm going to believe it forever. I mean, we don't subscribe to that here. It's as simple as that. Just look at Nifty itself from 2008. 40-50% has changed completely.
And which is not a very long period, not even a decade.
Not even
7
years'
years,
time.
7 years, yeah.
So that's telling you that you have to find the guys who will get into the Nifty maybe 4-5 years from now. And that.
So where are you picking your spots there? Which are some names, companies or themes which could find their way into Nifty next 5 years?
As we have spoken also, the specialty chemical space we have liked a lot. Infrastructure, the beaten down infrastructure we have liked a lot. Specialty chemicals, in our view, has been what has happened in China in terms of plant shutdown. We have said this, we've seen it coming over the last 2 years, that China, because of the huge pollution problem, has no option but to clamp down on, chemicals. Chemicals, we all know, globally, all chemical companies, have problems on pollution. Nobody can have 100% treatment. That's not possible. So, China, because of the huge thing around it, and now I think there's a G20 meeting in August, So
Second
again,
half of this year, yes.
yeah, I think it's in August, right? So again, if you remember, same thing happened in 2008, when they had the Olympics. So they shut down industries to get the air quality down so that people from across the world coming don't see China as being a polluted country. So exactly the same thing is now being done 3-4 months ahead of, the G20. So you're seeing plant shutdowns happening. You're seeing chemical prices go up several times. I think it's a huge trade on a secular basis because India, will be the beneficiary of, production moving from China in the chemical space, to a country like India. I think that's a big macro shift happening already. And, infrastructure, we've liked selectively and we continue to like it.
So when you say you like infrastructure, are you trying to spread your basket to companies or themes which will benefit because of government spending, whether it is defense or railways or roads?
It could be any or all of them. All we are looking at is companies which have at least got a hope of surviving their credit issues, or companies that never got into the credit issues to that extent. And there were a few. So either you get into a company which has problems today, but you can see a roadmap that they can address even 50% of their problems. And there are quite a few out there. So pick your spots carefully. Again, this is very tough. And let's be clear that small cap investing is extremely difficult. To do one company and get it right takes months and months of thinking, understanding the promoter, understanding his management teams, because none of the promoters have the skills to really, build great businesses. They have to be coached a lot of the time. It's a back-breaking work. I mean, it's not like buying ICICI Bank or, HDFC Bank where management processes are set, the businesses are generally in good shape. So it's a different kettle of fish. Very, very tough. No question about it.
Devina, a couple of shows ago when I interacted with Shankar, I asked him that, Shankar, I suddenly noticed that you got white hair on your mustache. Is that age? Is that wisdom? He didn't answer that question and he blamed it on the video link. He said he's not able to hear me.
Or I blamed it on the light.
So is it stress or is it age?
No, we have long past the stress threshold, I think. We've spent long enough number of decades. So that is, markets are fun, but they are not greatly stressful anymore, at least.
But to be a good investor, you need to be nimble. That's what I've learned from you.
Definitely.
But when it comes to a successful marriage and partnership, the commitment has to be strong.
I think, a good marriage, in my view, is, God's gift to you. There is nothing else that can be as precious because it's a pure gamble. And it's a gamble, particularly in a country like India with very, very little chance of exit. I mean, I'm told exits are better now, but at least back then it was, you can't even talk about it. So it's a one-way bet. So you'd better get it right. So if you do get it right, by God's grace, I think you have to be really, really thankful for it.
Where else do you smell consensus? Because a couple of months ago, there was a lot of consensus in banks. And for those who were overweight bank, they're suffering now. I get the same feeling selectively in IT and surely in autos.
Pharma?
Yeah.
Pharma has been exactly the same.
Exactly.
IT, we are a little queasy. That does the long term look as good as what the past has been? And there are question marks, around that. But it's too early to call it, But I do believe that being away from consensus that PSU banks, are being bad, I think it's too early to start calling the end of that consensus. Because remember, you don't have to be against consensus all the time. It is only at absolute pitch points on both ends, bearish or bullish, that you have to start thinking differently. If you start thinking differently continually, you'll be bankrupted. So that's not what investing is about. I don't think the PSU bank trade is that the consensus that they are bad is necessarily wrong at this stage.
And the selling in pharma, the pain in pharma, a year ago everyone thought nothing could go wrong. Now the general view is nothing could go right. Everyone is blaming on US FDA. Nobody is recognizing the fact that Indian generic pharma companies do have an inherent advantage. Is the current fire sale in the pharma sector more like a Flipkart sale where you should be a buyer, or it's too early to be a buyer?
Too early. I mean, we think we're still watching that. We still don't think it has
we have
turned
seen
yet.
Over the past few years, quality issues are genuine.
Yeah, it's not as if you can't just blame that
US FDA.
that the US FDA, the competitors are putting them onto this, because the fact is that I'm sure that a lot of the things that come out in the inspection reports are not wrong in terms of the quality
I
standards.
mean, for one pharma company in Bombay, I remember, they're keeping samples along with, the workers' food in a fridge. I mean, that kind of stuff, can't be making you look very good in the eyes of the US FDA.
Every time Shankar comes on TV, he's expected to make a big call. Today it's the power of not one but power of two. So I want not one but two big calls, starting with you.
No, as I said, that that right now we don't see a big move in the large caps. So it still remains that, again, selectively the small cap stocks. So that remains the theme. And if you're a small investor, then do keep a significant portion of your investments in fixed income.
Shankar?
I think commodities are a big call. If you're talking a big call, I think I would be a buyer rather than be a seller of commodities. I could be wrong. I mean, in all these trades, you can look very foolish, but that's okay. I mean, that's part of the game.
Last time you told me that it's a Jekyll and Hyde kind of a situation for Indian markets. So what is the Jekyll and what is the Hyde right now?
It's the same Jekyll and Hyde. So Mr. Hyde basically are your large caps and Mr. Jekyll are the small caps. They continue to be so. Even on down days, small caps are holding up very well even now.
Yeah.
And many of them are actually higher than where the index was, in the Nifty and Sensex were, a couple of months back. So they're showing a lot of strength, and I always I'm a good tape reader, so
yes.
I'm more than a balance sheet reader, so I watch the tape very carefully. The tape is telling you where the action is.
So what are the last 25 years telling you about next 25 years?
That's too long. That'll take me into my 70s or late 70s. So we'll see what the next 25 years are.
One thing you regret not doing in the last 25 years with Shankar?
I don't think I have any significant regrets. What about you?
No, none whatsoever. I think 25 years should have lasted longer.
Life in Mumbai or life in Dubai?
I like life in Mumbai. Devina likes life in Dubai, right?
No, actually, I really enjoy both. I wouldn't say.
Your favorite movie as a couple?
There, I think we have a lot of differences.
Yeah.
I like all smuggler kind of movies, Diwar and all that. I mean.
Shankar once told me that if he was not a stockbroker, he would have been a don.
That was his father's ambition. He tells me his father's ambition.
You would have still married him?
No, he hid all that. As he said, that exit barriers are high. So
good luck, guys. Thank you for your time. And
Sure.
just been 25. Wish you luck for next 25.
Thank you, Nikunj.
Thanks,
Appreciate your
Nikunj.
time. Thank you so
Thanks.
much.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.